Hello, traders. Gary Wagner here. It is 12:17 in Honolulu, 6:17 in New York on Monday, 8th day of July, 2024, and this is the evening report for gold and silver. Gold prices had a strong decline today of $34.70, taking the most active August contract to $2,363.50. That is below Friday's opening price. Gold opened just below the closing price on Friday. And what is most fascinating is that no new fundamental news came out. There were no reports and nothing that would suggest or lead to traders going in and actively selling gold except profit taking, which is the only thing that makes any sense on a day like today, in which gold dropped over $30 and gave up all of the gains that we witnessed on Friday. When compared to gold, silver's decline was much more moderate. Silver gave up 77.5 cents. That is a price decline of 2.45%. Considering that silver gained 2.75% on Friday, we can see that the decline was much more moderate than in gold. Currently, we have silver trading in Australia up 15 cents from New York's close at $31.06.5, basis the most active July contract. The dollar has absolutely been trading under pressure. If we look at this daily candlestick chart, we can see solid red candles for 7 consecutive days up until today, in which there was a very small gain. The gain itself was 0.11%, taking the index to 104.987. Before we cover our technical studies, I need to talk about our stop being executed today. We went long on Friday and were stopped out today. The numbers are on the screen, resulting in a very small profit of $700 per COMEX contract. If you recall from Friday's show, we talked about various levels of potential resistance as well as support. We focused on the high that gold achieved on Friday because it was equal to the high that came in on Friday, the 7th day of June, because on both instances, gold challenged the key psychological level of 2,400 and on both occasions was unsuccessful in closing above that. It is for that reason that traders were active sellers this morning, taking profits after gold prices were unable to close above 2,400 per ounce on Friday. That being said, what I'd like to focus on now is the actual closing price and low that came in trading today, which occurred just above the 50-day simple moving average. Of course, the 50-day simple moving average is used by technical traders to ascertain whether a stock or commodity is in a short-term bullish or bearish trend. The fact that we are still trading above that tells me that gold is still trading with a bias to the upside, which I believe could certainly continue. Tomorrow, Chairman Powell will begin his testimony to both the House and Senate. That will conclude on Wednesday. And then on Thursday, the government will release its most current inflationary data vis-a-vis the Consumer Price Index report. Current estimates show that the report on Thursday will continue to show inflation cooling. Today, the Federal Bank of New York produced estimates for Thursday's CPI report, suggesting a continued weakening of consumer prices. Consumer consensus predictions currently indicate that Thursday's report will reveal that inflation has declined to 3.1% year over year in June, down from 3.3% that came in May. If that estimate is accurate, that would provide gold with strong bullish tailwinds, moving it back up and above $2,400 per ounce. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.